Let's start with DraftKings. Are people really going to be gambling more when they're in a recessionary environment or inflation stays high?
Well, Julie, you know I love a liquid lunch, so great to be here. But let's talk about these three names, all dramatically down. But DraftKings, I think you're absolutely right. People still are gambling. The next generation had become a hobby, betting $5 or $10 on the Celtics or whatever the NBA Finals may look like. But interesting enough, the American Gaming Association stated that they saw first quarter revenue at $14 billion in the whole gaming industry, which DraftKings, as you know, has about 25% of that marketplace. That's the biggest year ever. So I think to your point, inside of inflationary pressure, inside of all the things that are going on from a headwind, from a macro perspective, yes, you are seeing it. So I look at this oversold name down about 52% year to date. I want to see it get back above its 50-day moving average at 1650, but I think this is a buy. I think this is an opportunity because you have to remember the all-time high was trading up at $74 just a year ago.
Give us the thought on Neo, the stock, not the singer-songwriter.
You know I love Neo, Tyler, but it's interesting enough, and I am not a buyer yet. By no means do I want to fade or go against George Soros. George Soros actually took a position, about an $84 million position in his nearly $7 billion fund. I think there's just a better opportunity for a lower price in acquiring this stock in Neo. And why is that? It's just ambiguity. Yes, they are the leader in EV. Yes, I think they have a solution on coming with more of a middle class EV car solution, but we don't really know what the lockdowns inside of China have done. So those ramifications are making me sit on pause and stay poised. But Neo and with George Soros, you are seeing a little pop in the stock. But again, another stock that's been decimated as we really can't measure the uncertainty coming out of China.
Final name here, Alibaba. That stock also weighed down in the past 12 months. What's your play here?
I think you buy Alibaba, and I actually own it through an ETF, PGJ, which is the Invesco Golden Dragon Index ETF. But Alibaba, another name, really hasn't recovered since Jack Ma made a lot of comments which financial regulators did not like in China. But I think if you look at the massive growth potential inside of the cloud business for Alibaba, that's going to be a congruent line, Julia, to what we've seen in AWS for Amazon. So I think there's an opportunity here. The $233 billion market cap is about 25% the size of Amazon. So I like being a buyer here as we see the second largest economy in China come back online, hopefully this summer.